Bitcoin is attempting to break up from the daily downtrending resistance. Could this be the start of a continuation upwards, or will it be nothing more than a fake out? Let's go ahead and jump into the charts. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having an absolutely excellent day today. Bitcoin is attempting to break out of the downtrending channel, the downtrending diagonal resistance, the same resistance we have been sitting under now for about 20 days. A break above this level will confirm that Bitcoin is no longer in this daily downtrend and we are starting a reversal. How high could we go? Is this breakout confirmed? Will it be a fake out? These are questions we're answering in the video today. Before we get into it, smash the like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, and the relevant news events. No hype, no BS, no emotion, pure raw TA. If that is the content you were interested in, join us on Telegram. It is the second link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, Bitcoin, and the entire market. If you're interested in our trading channel, you can join our VIP group. We have 647 members. We post trading signals with exact entries, exact targets, exact stop losses, trade justification, and exclusive charts. Not only will you get access to that, you'll also get access to our group chats. We have, of course, a trading chart and education chat where we teach you guys how to trade, we show you trades we're taking, and we develop your trading skills. We have our news chat, we have our general chat, we have our trading chart chat. We have so much in here to help you guys develop your skills and become better traders. If you are interested in joining this ever-growing community of like-minded individuals and traders, go ahead and contact us. You can find all information in the pinned comment, including our entire trading track record with over 79% win rate, over 700 trades. Let's get into the video, guys, starting off with the market data. Monday comes around eventually after the weekend, and with Monday, volume starts to pick up. We have already seen a small increase in 24-hour volume at around 10.59%, sitting at 37 billion. With that, liquidations have increased. We're sitting at 32 million in liquidations, down 28%. A lot of indecision, a lot of consolidation, a lot of compression within the last 24 hours. As for August, we are currently sitting down 0.37%. Moving on to the volatility index, we can see the overall volatility on the 30 end of 60 period are still at these all-time lows. In fact, we are still dropping, sitting at 1.22, the lowest we have seen the volatility index for Bitcoin ever since, guys, July 2020. We have not seen a volatility index represent anything sub 1.2 since July 2020. Absolutely insane stuff, guys. Moving to the 60-day, we can see we are at low periods on the index over here on the 60-day, sitting at sub 2. We're sitting at, what are we sitting at? 1.7, 1.6, 1.67. Again, the lowest we have seen since this point in 2023, January. And prior to that, we have not seen it sit that low since 2018. So volatility in cryptocurrency, volume in cryptocurrency are at record lows. And when we see low volume, low volatility, we expect moves to soon follow. Looking at the liquidations, with 32 million in liquidations, relatively evenly split between those long and short positions. Moving into the DXY has opened up. It has opened up green. We obviously have 20 hours until this candle closes. The key levels we are watching are these downtrending levels. This downtrending diagonal resistance, a break above here will be bullish. Okay, it will be bullish for the DXY. Of course, we can expect the DXY to go upwards. And of course, while we remain below this level, we do have the threat of rejecting and continuing downwards. If the DXY goes up, this will be bearish for the markets. If the DXY goes down, this will be bullish for the markets. We do have some key economic information coming out very soon. Of course, on the 10th, which is in 3 days, I think, or 2 days time, we do have inflation data. CPI data will massively impact the likelihood that we see interest rate hikes or interest rate pauses. And of course, if CPI data comes out very bullish, the probabilities of a pause for interest rates increase, and that could drop the DXY down. If the CPI data comes out bearish, the probabilities for future interest rate hikes to continue, this could be very, very bullish for the DXY, and of course increase the cost of debt and drop asset prices down. So we're definitely watching CPI, we are definitely watching PPI, we're even watching things like this. Retail sales on the 15th have good leading indicators of what retail is doing in terms of spending habits and of course inflation and strength of the overall economy. These are very important metrics and very important pieces of data that are leading for inflation and interest rates. Moving on from there, looking at the stock market, we can see we have opened the candle above the 4,500 level, which is good to see. This is a very major support level that does need to be held onto. If this level is lost, the S&P 500 will essentially be in a free fall all the way down to 4,300. That is a pretty significant pullback for the S&P 500 if that does occur. Looking at the Dow Jones, a very similar thing. We have got rejected from these local high points. Again, we do have our next major support sitting down at 35,000. We do need to bounce some level to continue upwards. A rejection from there will result in a likely breakdown and break below this POC level. Definitely watch out for that. But let's go ahead, guys, and jump in to the crux of today's video, which is going to be Bitcoin. Bitcoin is attempting to break out of that downtrend, that daily downtrend that we have now been in for around about 20 days. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 US in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. So let's go ahead and double check exactly how long we've actually been in this downtrend for. We can see 24 days, so 24 and a half days we've now been in this overall downtrend. Bitcoin is attempting to break out. So first and foremost, we talked about this a fair bit yesterday. We talked about the validation points we were looking for. We'll go over that today again. And we'll talk about the targets and measured move. But primarily in today's video, we're focusing on what is the likelihood this breakout will be confirmed, and if it isn't confirmed, what can we expect from Bitcoin on the immediate term time frame, and how could that impact the higher time frame charts. So first and foremost, we are in a descending channel formation. For the new viewers here, this ascending channel formation has been developing over 24 days. Of course, it is a bullish reversal structure. A descending channel formation is a overall downtrend where we eventually have weakening bearish strength. Okay, we have weakening bearish strength. Weakening bearish strength is now reflected by increasing momentum. Okay, this is not bullish momentum, but it is increasing momentum and increasing volume in a downtrend. So the metrics behind what drive the price action are starting to move from bearish to bullish, but not quite bullish yet. And we see that reflected on a chart as by a sideways consolidation within a downtrending structure. This represents a potential bullish reversal developing, and if it breaks out and the metrics look bullish, it could result in a full-blown reversal developing from that level. If we take a look at the measured move of a descending channel formation, we take the width, so the top line to the bottom line, apply it to the perceived breakout point. We can see if we break out over here, we have a potential measured move range, which will take us to 30,800. This is very important. If you're watching this, the measured moves are not confirmed targets. They are simply price ranges, a range of which the price action could move within and still be considered normal, meaning i.e. not deviating from the expected range of price action. For example, if we give you a very clear example, if the price were to move down over here and bounce, this move down would be considered a expected/normal move. It will not deviate away from the expected trajectory or range of expected price action within this channel. If the price were to go straight down, then that would be considered a deviation until confirmed not to be. Same goes with measured moves. We have an expected range of price action, which we would consider the range to be normal, the price action direction to be normal, and that would not reflect a overall price action target, but it would reflect a range of which the price could potentially move within, based on the technical levels, based on the volume levels, and based on the structural development which we have seen prior to the breakout. So that would be the measured move target. Whether or not we get there is a whole nother story. Generally, when we see moves upwards, we move into liquidity levels, we move into resistances. So where are the next targets for Bitcoin if we assume this is going to be a break upwards? We are looking for the VRPV gap sitting at 29600, okay? 29600 is going to be a target. This VRPV gap, we can see if we push above our VRPV here at around 29,280, 29,300, we start to drop in the VRPV, suggesting as we push from 29,300 to 29,600, we have decreasing resistance. This could facilitate a continuation upwards into this range before then the next move or a potential rejection. The key level the bulls need to reclaim, the absolutely most significant levels the bulls need to reclaim to push the price upwards on a macro scale, not just break up, but to push the price up past 32,000 into 32,000 is going to be the POC level at 30,300 to 30,400. A break above this level pushes the price into a decreasing range of resistance. You can see our resistance is decreasing as the price moves upwards. Therefore, the volume requirements will have to be lower. The momentum and volatility will increase, and the price is more likely to push upwards if the momentum is positive, which it will be if the price moves up into this range from a uptrend. So if we break above this level, we can expect a continuation upwards, and therefore this level here is a major bullish trigger. Now let's talk about the breakout of this channel. As we said in yesterday's video, we'll say it again, to confirm a breakout, we need three things. And look, these three things aren't standard. This isn't like a hidden rule in trading. These are from my 7 years of experience trading. These are the three rules I developed over time to validate breakouts, so I'm more likely to be on the side of a breakout and less likely to be on the side of a fake out. What I look for specifically is, number one, a structural and trend-based break of the overall structure or trend that it is developing within, meaning a break of the downtrend. We need to see a break above the downtrend resistance. We need to see the actual trend flip, or at least attempt to flip. We have seen that. We have got point number one. Number two, we look for volume. And we look for volume not in terms of vertical volume, but we look for volume higher than the prior levels of volume within the consolidation pattern. If we look at these prior highs, these are all happening within this downtrending channel. We are looking for a surge in volume greater than these prior highs in volume that originated within this structural formation we have been in. We can see the CVD over here is attempting to break above that level. Not quite yet at point, but if we do break above that level, that would be point number two. And point number three is going to be momentum. So trend, volume, momentum. Momentum being the RSI, we are looking for positive momentum shifts. Again, we have rising momentum here, but we have a overall downtrend. So this right over here is called weakening bearish momentum. If the RSI breaks above, we will then have bullish momentum, we'll have a flip, we'll have positive momentum. We need to see positive momentum on the breakout with positive volume and a break of the trend to get our 3 points of confirmation, which will increase the likelihood the breakout is not a fake out and will continue upwards. So right now, we do not have all those 3 points. That doesn't necessarily mean Bitcoin will not break up and continue upwards, but it does mean you should be looking at this breakout here for a little bit more caution than you would if we had all 3 of those points of confirmation. You should be saying, okay, we have 1 point, we maybe have 2 points, we don't have those 3 points, I'm going to be a little bit more cautious. I'm probably not going to be buying this breakout. I might wait for a rejection. I might wait for a retest of the trend line before looking for entries. Of course, we have been developing and establishing our long positions well before this breakout, so we're set for the upside. But if you're just looking at the charts now, you should be a little bit more hesitant and cautious. Remember, when the most obvious time to buy is generally either late or wrong. If the charts are looking obviously bullish, that is the worst time to be looking to enter, okay? So we're looking at this chart here. We're saying we're breaking out. We're looking decent. Volume and momentum is not quite on this side right now. We're waiting for us to flip over to then say for sure the price has a very high chance of continuing upwards. Right now, the price will continue upwards provided it does hold this trend line, but the trend line is not guaranteed to be held while these metrics remain weak. So keep your eyes on that. If we fail to hold and break above, what could happen to Bitcoin? Let's dive into the smaller time frame now. We're going to go ahead and get everything off the charts. So this is going to be our hourly chart, and we'll go ahead and start on a 4-hour chart. Let's go ahead and take a look what's happening. So we have some low points over here. We'll go ahead and plop in. We obviously have our $29,000 level of support. The $29,000 level of support has been holding as support now for quite some time. Basically, the entirety of the weekend, we held above this level. So we do know 29K is going to be a bearish trigger point for a bit of increased volatility, a bit of decrease in strength, and maybe even a continuation downwards. So we're looking at these lower points. We're more or less looking at the VRPV, and we're looking, where does the VRPV fall off? It falls off around 28,850, which is going to be the second line, hence the range. If you look at this range, it is a range of support. Right below this level, this is where the support kind of falls off, and we expect a continuation downwards. So we're looking for continuations from a horizontal level. We do have a decent base of support over here before the next move down. If we do break from here, we do expect that move into that 28.4K level, which is going to be that next level of major support. And again, 28.4K is going to be the upper band of the Gaussian channel on the weekly chart, which reflects a major key level of support. We do not want this level tested. In fact, it would be better if this level is not tested. If it is tested, we do not want to close a weekly candle below it. If we close a weekly candle below that Gaussian channel, the likelihood of the momentum flipping bearish on the daily chart significantly skyrockets. So talking, it goes up like 80%, all right? It's a massive jump. And if that happens, then the probabilities of a breakdown from this level massively skyrocket as well. Remember, momentum is leading for price action. If we see a negative momentum flip of this trend line, the price is likely, not always, but it is likely to follow suit around 70% of the time. So we are definitely watching for that for the bearish case scenario. Until then, the bulls do have control, right? The bulls have control on the weekly, the bulls have control now on the daily. We're trying to get control, and the bulls have control on the monthly. All we have been seeing here is a daily downtrend, and we are seeing weakening bullish strength. Remember, there is a difference between weakening bullish strength and bearish strength. Bearish strength will come when the uptrend is lost. Right now, we have weakening bullish strength, and if the weakening bullish strength continues to weaken, it can flip bearish, and that is the whole risk. That is the whole threat the price action is currently under. So let's go back to this chart over here. Obviously, we're looking at this chart. We're seeing one major thing already. We're already seeing the 50 EMA is providing a decent amount of resistance on the chart. That is going to be that red horizontal line. If we go ahead and take a look at some key levels, we can draw in our prior key level, which is going to be 29,325. We'll go ahead and quickly pop that in. And we know 29,325 is going to be a bullish trigger for Bitcoin on the smaller time frame. So if you want to call it a rock on a hard place, a stuck between a brick wall and another brick wall, whatever you want to call it, this is kind of where we're sitting, right? We're sitting between a support and we're sitting between a bullish trigger or resistance. A break above this level will validate a continuation upwards on a horizontal scale. We're looking for a move into this range. We're looking for a move into this lower range of around 29.5 to 29.6. And of course, if we break above 29.6, then we continue through. So a break above 29,325 will validate a move into this range where we'll either find liquidity and reject, or again push through like we have seen before and continue upwards through that channel breakout that we have seen at the start of the video. Until then, we are kind of in this chop zone, this horizontal consolidation. There's a little bit of a danger zone where we're pushing up and down without really making any definitive decisions. Again, if we go back to this daily chart, this 12-hour chart, and we take a look at that channel again, if we do happen to break out of the channel, the probabilities that we do continue upwards do increase, and thus, if we do break over 29325, it is very likely that we will be continuing through 26 and upwards, but definitely do watch out for that. I'm going to leave the video, guys. If you've got any questions, leave them down below. To summarize everything, give you the most important information. We are breaking out, but it is not confirmed. It is not confirmed yet, okay? We have to wait for our technical confirmations on the chart. We have to wait for the strength to go bullish. If we have price going up, but we have metrics sideways, this is not bullish. This is not bullish. If we have price going up, we do not have these metrics bullish yet. This is a potential deviation. It is potential weakness. It is a potential exhaustion. It's something we do have to watch out for. It is not saying it's not going to happen. We are not saying we're not going to go up, but we're saying this breakout at the moment, right now, is not strong enough to validate and confirm that we are continuing upwards. We do need to see a little bit more still, but all in all, it is looking okay, right? It's looking okay while we remain above 29,000. It's looking much better while we remain above 28.4. Those are the two key levels. Lose 28.4, lose 29K. We're getting worried. We're getting a little bit worried. We're expecting the price to pull back. We're expecting a correction. At the moment, while we remain above 29,000, particularly 28,800, we do have potential to then validate this breakout. We do have a potential for these metrics to push upwards, and we do have potential to continue upwards. So right now, watch those key levels, watch those metrics develop, and then make up your mind. Thanks for watching, guys. I hope you enjoyed today's video. Check out all the links down below. Check out the Crypto Academy courses, and I'll see you guys in tomorrow's one. Have a great day. Thanks.